What's up, guys? Today's video, I'm going to talk about 5 things that I would have done differently as an insurance agent. If this is your first time tuning in, my name is Sakha. I started this journey about 5 years ago. In those 5 years, I've grown to a $5 million insurance agency from scratch. We've grown organically. And in the year 2022, I'm also acquiring another $5 million agency, which will bring me to a total of $10 million in agency premium, and we're doing this all in only 5 years. In these 5 years, I've made a ton of mistakes. I have learned a lot, and in today's video, I'm going to give you 5 things that I would do differently if I had to start all over again from scratch. If you get some value, do me a huge favor, destroy the like button, follow me and subscribe for all things entrepreneurship, self-development, and insurance. Follow me on my social media platforms, and let's get started. So the first thing I wish I did differently was I wish I spent more on marketing. And marketing for me when I was just getting started was the number one is internet leads, okay? When you're building an agency from scratch, internet leads are probably the most instrumental, the lowest hanging fruit. It's like the necessary evil. You hate them because most of them are crap. These internet lead companies are selling us 70, 80% crap, and that 20% we hope we get to write, and convert into business that we get to, continue to make money off of our residual incomes. And, having that understood, I was very conservative with internet leads because I was new to the business and I didn't want to bite off more than I could chew or spend more money than I thought that I could handle. And it's scary at first. But, in retrospect, that we're in the business of residual income. And so if we can get these policies on the books and if we can retain these policies, we're going to make money on them for however long they stay with us. And a lot of times, depending on where your where your agency is located, they will stay with us for anywhere from maybe 3 to 4 to 5 years. And so keeping that into account, it's just playing the long game and having that long-term mindset. So with me, I spent about $3,000 a month on internet leads. Where my mind was focused on was organic. I was like, let me post on social media, let me reach out to all my friends. And I did tremendous at that. I did a really good job of building a personal brand, which I talk about on this channel. I did a really good job of building partnerships and people to send me business and really just to get my entire friends list to stand behind me and to send me business. And that really, really worked for us. But as I reflect, and I look at the majority of my business, it comes from internet leads. It's people that are shopping on the internet for insurance. People shop on the internet for everything. And so, the more you spend on internet leads, it's not going to guarantee that you write more, which is going to lead me to my tip number 2, but it is certainly going to help you. It should help you write more if you're catching what I'm saying. If you spend more on marketing, assuming that you are working the leads and have the right processes to working the leads, then you will see a return on your investment. Now, which leads me to number 2 is I wish I would have worked my leads better because we bought a lot of leads and my employees at the time would call these leads maybe once, maybe twice, maybe 3 times and then just give up on the lead. They just say, oh, it's a bad lead, Nick. They didn't answer 3 times. Now, if they don't call this lead, if I don't see at least 20 attempted contacts, 30 attempted contacts, then that means we're dropping the ball. That means we have opportunities and we need to improve our outbound activity to try and reach these internet leads. Because what I have learned is that internet leads are usually best 6 months later, meaning the leads that I buy today, if I attempt to call them months later when no other insurance agent is calling them, then I'm going to have the most success, the most contact rate. They're not getting blown up by agencies all over the state, and they're going to actually give us the time of the day. So aged leads have really worked well for us, but again, we used to call them just a few times when we bought them, and my team would just write them off. Knowing what I know now, we need to call them multiple times day 1, multiple times day 2, multiple times day 3, and then then it gets put into a folder to call, much later. But make sure you have the right systems in place for your pipeline management. For the people that you're not able to close now, make sure you're able to contact them later. And then data is king, and so that's why internet leads are so important. But those are the first two things I wish I would have done differently: is spent more on marketing and actually managed our systems to get the better ROI from those marketing channels. And speaking of processes, the third thing that I would have done differently is not sold on price. So let me be transparent here. My first 3 to 3.5 years of business, we sold strictly on price. All right. And I don't know about your company, but the company that I represent, we're not the cheapest. Okay. And the number one excuse that you will hear from most of your team members, most of your employees, from people all over your market, people in any industry that sucks, they're going to blame it on, we're too expensive. And we were successful, right? We were just a volume play. We used to call leads up and say, hey, if we can't get you a better deal, if we can't beat your price of so-and-so, then we're not even going to call you back. And we actually wouldn't call them back if we were more expensive. And that's not the way to do business. You're not going to excel. You're not going to be highly successful in anything if you're focused on the price. And so one of the things that we adopted and implemented in the last 1.5 years and taken it seriously is leading with liability. And because we sell insurance, we sell property and casualty insurance, the right thing to do is to make sure your customers are properly protected, that they have the adequate amounts of insurance coverage that will suit their needs, that make sure that you make sure that they are set, in the event of a worst case scenario. And that's what insurance is for. And in the beginning, I'll be honest with you guys, we used to sell just on price, and it was just a volume play. We quote 20 people, we're bound to get one or two, and we're bound to be cheaper for one or two. And focusing on being cheaper is not a good strategy, especially for the right clientele, for a good quality book of business that you're trying to build. You do not want to sell just on price. So that's one thing I wish we took seriously way sooner, was leading with liability, with actually training my team to get them prepared in ongoing training is what I'm referring to get them prepared to handle these objections where we are more expensive. Better quality training where we're building better rapport with clients on the phone, really understanding their needs and really making the right recommendations on the amounts of insurance coverages that they need. And of course it's going to be more expensive, but we need to know how to be able to handle that. And so you guys have probably heard, if you've been on this channel before, you've probably heard me, promote Craig Wiggins coaching. Craig has been one of my coaches for the last, several years. And I finally adopted his lead with liability system. If you want more coaching on that, or if you want access to his training platform, I do put the link in the caption. And so if you use my discount code Sakha, you get $100 off your very first month, and I get a little referral credit. So be sure to do that if you're looking for the right training. Craig Wiggins Coaching, they're second to nobody. They are the best in the country, and I know that they'll be able to help you. So if you struggle with selling on price and price only, that's what I recommend, is changing your office culture, changing the dynamic, the vibe in your office, and you guys are just changing your focus from price to value. The fourth thing I wish I did differently was, I got this labeled as premature promotions. What do I mean by that? Okay. When I got started, and I was maybe less than a year in, or maybe about a year in, you're naturally looking at some of the pieces that you have, or the employees on your team, and you're looking at, okay, who's going to be my manager, right? Who's going to be my office manager? Who's going to be my, service person? And to give you guys other perspective is, make sure you specialize as well. I specialized about 1.5 years into my agency, maybe 2 years, where I separated sales from service. Make sure that you have somebody 100% dedicated to service to be able to service your clients, while your salespeople need to focus on sales. So that's another just extra bonus tip. But make sure that you're not promoting people just because. And I'm guilty of that. When I went from one office to two, I felt the need to promote people Just like, I can't be in two places at once. I need to, promote this person to be a sales manager. And I promoted people that didn't belong in those seats. And here's another tip, is that just because someone's outstanding at sales doesn't mean they're going to make a good manager. And I learned that the hard way as well, So premature promotions, as long as you are involved in your agency, your insurance agency, you do not need to promote people, just yet. You will know when the time is right. And the right people will do all the work necessary. They will have the influence, the buy-in from the team around them, and it'll just feel natural to put them in that seat, to put them in that position. So don't force promotions. You can handle it. Until you are a mega agency, until you grow, you're not necessarily going to need a management team in the very beginning. You might need to, work your way up into that, and you'll know when the time is right, because you just literally cannot handle everything. But definitely, certainly, once I was about 2.5, 3 years in, I stopped selling myself, and I just had my team sell. And every personal referral that I got, I just leveraged that to my team. And so I recommend that. If you can the more you can focus on the business versus in the business, the better off you're going to be. But in the beginning, the first couple years, you were going to have to do that. And so you're not going to need a management team. Don't get the itch or feel pressure to put someone in a management position before they are qualified or before you even need them. So that's my advice there. That's the fourth thing I would have done differently. And the fifth thing I would have done differently is I always did a good job of going to events and investing in my self-development, getting around the right people that are just crushing it in our industry, people that are doing better than me, that make me feel challenged, that make me feel uncomfortable. And I've done a good job of doing that over the last 5 years. I've gone to several events, and I've been literally the smallest agency in the room. But one thing that I would add and I would have done differently is I would have had my team involved in these conferences. I would have had my team involved in these events. And so, yes, it's an investment. Yes, it costs more perhaps to fly your team members out to invest in their tickets and their hotels and their food and maybe whatever it is that you're going to contribute to. Yes, it's going to cost more. But the ROI, assuming you have the right people, right? Don't bring people that are, that you're on the fence about, that are on your team. If you're on the fence about anybody, fire them, right? But assuming you have the right team, make the investment into them, because the same way that you're feeling after a conference or an event is the same way that they're going to feel after a conference or an event. And so, for an example, this last year, it's the year 2021, my mentor, Craig Wiggins, came into town. Luckily, it's here in my backyard, Las Vegas, Nevada. I had my entire team go out to the conference. It's about a day and a half, and they took so much out of it, and it was worth it. And it was worth spending that money to have them there. And it opened up my eyes, seeing their excitement and their energy after the conference and what it did for our sales. It opened up my eyes to make the investment, even if it's out of state. Just make the investment. It's a full tax write-off. Let's invest in our team's development, because that's what's going to get them bought in over the long haul. That's what's going to get them bought into everything that you're doing. And so that's the fifth thing I would have done differently. So I hope you guys got some value out of this. These are 5 things that I would have done differently in my last 5 years. And check out my other content, because I drop a ton of videos on insurance, entrepreneurship, self-development, and I've really just documented my insurance journey along this way, and I'm going to keep on documenting it. So if you got some value, smash the like button, follow me on my socials, and subscribe. Thank you guys for watching. Peace.